Just a year or two ago, JP Morgan CEO Jamie Dimon here stated on live TV that Bitcoin is a scam. Its only use is for money laundering and other illicit activities, and in 10 years' time, Bitcoin will be closed down, Bitcoin will go to zero. Fast forward to today, and Bitcoin is now worth more than Jamie Dimon's entire bank. Bitcoin is worth more than JP Morgan Chase and Co. Bitcoin's currently valued at $123,000, market cap of roughly 2.4 trillion, which is doing very, very well and seemingly still on the rise. This is the beginning though, and this is, truth be told, also quite unsurprising. Bitcoin's ETF is comfortably the most profitable ETF in history, and this has been achieved in a span of 1 year. Whereas the next most profitable ETF is the Russell 1000, which took 25 years to reach its equated value. Just imagine what Bitcoin will look like in 25 years. We are still so incredibly early. Jamie Dimon and the rest of Wall Street realized that Bitcoin is not a passing fad anymore. It's the real deal, and they either need to jump on board the train before it leaves the station or get left behind. Now, as we can see, both Morgan's, JP Morgan Chase and Morgan Stanley, have shocked everyone as they have flipped the switch and are now recommending everybody should own Bitcoin and crypto as part of the debasement trade. With the dollar weakening day after day, and as we can see, gold is printing all-time highs day after day, just short of that $4,000 per ounce. For the first time in history, gold is going up higher and higher and higher as the valuation of the dollar continues to grow. With gold rallying, Bitcoin being perceived as the digital gold, Bitcoin is only going to continue rallying from here, and so will crypto, namely of course XRP will follow in suit, being an asset that can actually offer real utility. JP Morgan and Morgan Stanley, they are advising you to protect your wealth, protect your assets against relentless deficits and inflation. They are telling their institutional clients who manage upwards of $2 trillion in savings and wealth for their clients to start allocating into crypto before it is too late. As we can see in the special report, Morgan Stanley's GIC Global Investment Committee, they published this last week, October 1st, 2025, and they consider crypto as speculative but an increasingly popular asset class that many investors will seek to explore thanks to advancements made in regulations and with the support of the US President Donald Trump as well and the administration. They are starting with Bitcoin, of course, being the easiest entry point into crypto, but that's just the tip of the iceberg. They want a multi-asset portfolio. As we can see here, they're talking about having a multi-asset portfolio. That's the best way to continue allocating wealth to make even more gains in the years to come. And they will definitely want XRP. In fact, Morgan Stanley have already publicly confirmed that XRP is the chosen one that will replace SWIFT, the global monetary system, thus, as a result, would overtake Bitcoin as well. Very big news. So the takeaway from this is that Wall Street are finally accepting crypto. It is going mainstream. Only 4% of the optimistic or opportunistic growth, only 4% of the clients should be allocating into crypto. So 4% of $2 trillion effectively right now. But again, that is the initial allocation. As the market matures and confidence grows, XRP will step further into the spotlight. The percentage allocation into crypto, into particular XRP, will grow, and it will diversify away from TradFi, into DeFi, into real world assets, into tokenization, away from Bitcoin and into XRP. JP Morgan and Morgan Stanley have shocked everybody. We are so early. To find out more, stay more locked in, come check out the VIP wop.com/coin factory from Alpha institutional research documents, educational courses, trade alerts, and much more. Check it all out for free. 7-day free trials. Link down below in the description. And remember, as always, don't look short term, think long term, and I'll see you in the next one.